Howdy, everybody. Welcome to Liberty Call. Today is Tuesday. Yeah, it's Tuesday, November 12th, 2024. Hope you're having a fantastical day out there in the interwebs. I'm tired. Just got my workout in. A little sweaty and didn't work out yesterday because my shoulders are killing me after clearing the driveway 3 times last week. 3 times. That snowblower's no joke. That thing's a bitch to move, especially when the snow's like super wet and sticky and gross. You know, normally we get this soft powdery stuff, which is like blows away. You can get out there with a snowblower and blow it away, or not a snowblower, leaf blower, and just it'll blow off. But this stuff was like, you know, Chicago snow. So anyways, hope you're having a great day out there. It is a pretty nice day here in Colorado. Clear skies. Got to go out yesterday evening for the first time in like a week. Got to go have, went and had some dinner, did some grocery shopping, did some other dropping off. I had a stack of mail from letters sitting here on my desk because I couldn't even make it to my mailbox. So I took them and dropped them off at the post office. So any clients, if you've been wondering where your summary letters have been, they were sitting here because I couldn't make it out to the front. So anyways, all right. Well, before we jump into the news for today, the markets did not look like they were in a happy mood. If you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All right. Now we can get into the numbers. Dow Jones was down 0.86%, 382 points, closed at 43,910. S&P 500 down 0.29%, 17 points, closed at 5983. NASDAQ down 0.08%, 16 points, closed at 19,282. The VIX was down 1.74% today. It's at 1471. Canada up 0.54, Brazil down 0.14, and Mexico down 0.65. Over in Europe, lots of red. Germany down 2.13, the UK down 1.22, France down 2.69, the Netherlands down 1.49%, Spain down 1.85%. Was it Italy down 2.15, Switzerland down 1 2/3, and Portugal down 1.37. Russian exchanges also red today. Both the MOEX and the RTSI down 1.04%. And the Asian markets, the Nikkei was down 0.48%, Australia down 0.13%, New Zealand is flat at 0 right now. In China, the Shanghai was down 1.39%, the Shenzhen component down 0.65%, China A50 down 0.95%, DJ Shanghai down 1.37%, Hang Seng down 2.84%, and the Taiwan weighted hasn't closed on the 11th. It was down a 10th. All right, so those are the markets. Let's jump into our market recap. S&P 500 rally stalls as Treasury yields jump ahead of the CPI data. Yeah, because that's the big, I guess the albatross right now is the inflation. And I personally, again, this is just my own personal view. Don't take this as advice. Only the people who pay me can are the ones who can get mad at me if I give them bad advice. You're just watching on this is entertainment, folks. But like I said, CPI or the inflation has been running hot. It was running hot last summer summer of 23 when they stopped raising rates. I probably would have taken rates up to like 7, at least match the rate with the level of inflation and then come down with it. So anyways, all right, well, let's hop into the news. The S&P 500 dipped on Tuesday, breaking its recent rally as rising Treasury yields in anticipation of fresh inflation data put investors on edge. Ooh. Yields on the 10-year Treasury rose by 9 basis points, reflecting market caution ahead of October's Consumer Price Index release on Wednesday. That's tomorrow, folks. With inflation expected to hold steady from September, any uptick could impact the Federal Reserve's approach to further rate cuts. Again, what is 0.25% really going to matter? But hey. The Fed recently reduced rates by 25 basis points and reiterated a data-driven strategy with the possibility of another cut in December, still open but uncertain. Data-driven. These are the same morons that in the spring or late spring, early summer of 22 told us inflation was transitory, that we were just making it up and we were being hyperbolic, that all that money printing in the summer of 20 and then going into 21 with the whatever Biden's stimulus package was called, the Inflation Reduction Act. I think that's what it's called. Didn't reduce any inflation. Actually had a lot of spending in it, which spending creates inflation. Unless you're taking money from the taxpayer and then using that to then spend, that doesn't create inflation because you're just, taxpayers, say they send in $1 trillion, you take that $1 trillion and you spend it on payroll and bombs and all the stupid stuff that they waste money on in the federal government. But see, that doesn't create inflation. What creates inflation is when the Fed just increases the money supply, or banks take and, lend out money. That's where the money creation is done. It's not through the, just taxing people. That's not how it works. All right, where was I? Oh, I lost my spot. Uncertain. All right. Current market pricing shows a 70.7 likelihood of another rate cut, but a 29.3% chance that rates will remain unchanged, as tracked by the CME's FedWatch tool. Adding to market focus, several Fed officials, including Richmond Fed President Thomas Barkin, will give addresses this week, potentially offering further insight into the Fed's approach. Barkin noted that the labor market remains robust, suggesting the Fed is prepared to respond as necessary. The corporate earnings season is winding down, though notable companies continue to report results. Home Depot's stock fell 1.3% despite an optimistic forecast on annual sales, citing steady demand from professional contractors amid weakening consumer spending on large projects. In contrast, Shopify surged 20% after projecting strong fourth quarter revenue growth, while Live Nation rose 5%, boosted by strong earnings due to controlled costs and higher concert ticket prices. Other highlights included Hertz, which gained nearly 9% despite a disappointing third quarter report, and Tyson Foods up over 6% on better than expected results and a positive 2025 outlook. Netflix also gained attention with a nearly 2% rise after announcing that its ad-supported tier now has 70 million active users. All right. I saw another little tidbit that they're making a Happy Gilmore 2. You may already know that. I really don't follow, the entertainment news that closely, but on the, like when you bring up your Internet Explorer or whatever it's called these days, that's what I use for all my business stuff. I use Chrome for all my personal websites, and I just like to keep them separate. And every day when you bring it up, it has like the news and such from Microsoft. And Happy Gilmore 2 is coming out. Adam Sandler's working on that, and they started what do they call it? Principal shooting or preliminary shooting in September around Adam's birthday. I think that's what the article said. So anyways, it's not my favorite of Adam's movies, but, Big Daddy was probably my favorite because I was a young father or going to be a new dad when that movie came out. And I think my wife was pregnant at the time. So I really relate to that. I had a young stepson at the time, and I think he was probably like 6 or 7. Yeah, he was about 7 when my wife was pregnant. And, so I was this new father. I was like, 22, or I was 23, 24 years old at the time. So I really related to that movie because I am still that 15-year-old child. But, anyways. All right, let's get to next article here from Zero Hedge. How do you create a recession? This is written by Daniel LaCal. And let's see what he has to say. Daniel LaCal argues that a potential U.S. recession stems from years of excessive government spending, rising debt, and inflationary policies. I 100% agree. He criticizes what he calls upside-down economics, where government spending increases both during economic booms and recessions, continually inflating public sector growth and federal debt. The Biden-Harris administration, LaCal suggests, has mirrored policies seen in socialist administrations that creates high deficits and artificially bolster GDP and employment figures through government jobs. Yeah, government jobs is just it's just adult daycare. If you work for the government, you're probably not doing anything of any real value, and you probably should just quit and go get a real job that actually is productive in society, as opposed to being a burden to the rest of your neighbors. Let's see here. Where was I? This approach, he contends, leads to inflation and mass deeper economic issues by attributing rising prices to corporations rather than the effect of increased currency printing. Following the 2024 election loss, Democrats can now blame the anticipated recession on Trump's administration. If Trump maintains high spending and taxes, he could be responsible for any subsequent debt increases. If he cuts spending, he might be blamed for weakening the public sector. Oh no. What would we do without people who don't do anything? I guess they could. Well, here's what I would do. We've got 50 million illegal aliens in this country. We could take, the 4, 5, 6, or plus the government contractors. You know what? If you want to keep your job, you go hunt down illegal aliens, toss them across the border, and then we'll consider whether or not we give you citizenship back. Because, frankly, you shouldn't be voting because you work for the government. You're a ward of the state. So, frankly, you should not have a say in anything. All right. Where was I? He believes that such approach, though it may initially lead to a short recession. Let me start over. Lacal advises to a shift to supply side pro-growth policies, advocating for tax cuts, reduced government spending, and a focus on private sector growth, because that's where productivity happens. He believes that such an approach, though it may initially lead to a short recession, would result in a healthier, more productive economy. He argues that a temporary economic downturn is preferable to propping up GDP through debt and unproductive government expenditures. According to Lacal, strengthening the U.S. dollar, reducing debt, and implementing a sound monetary policy are essential to long-term economic stability. And some Lacal's proposed solution includes sound monetary policies, reduce bureaucratic expenditures, and lower taxes. He warns that continuing current policies will lead to stagnation, inflation, and further erosion of economic growth potential. I 100% agree. There's nothing there that I could argue with. Yeah, and I mean, like he says, going through a temporary downturn, I would argue that 4 years ago, if given the chance, most of the people, and most of the clients I've talked to, they haven't disagreed with me when we talked about this. I would rather gone through a downturn in 2020, which we were headed into. COVID was just the perfect excuse to print a bunch of money and, keep Trump in office, which that didn't work. Then, the Biden administration had to double down and spend more money because they wanted to, make things look better because they knew things were going to fall apart sooner than later. And, now we're here where we're at. The economy somewhat survived, did okay through 2021 and 22, but all the inflation that we've had, I would have much rather had the downturn, have the markets go through their corrections or bear markets or whatever it might be. Odds are by now they'd probably be back, above where they were at the time. And we wouldn't have all this inflation and stocks and, equity markets are just completely inflated right now. We have no idea what is fair value. So, it makes it tough to be an investment advisor right now. All right. Last up from the Mises Wire, your kids are already communists and college will make it worse. I do not advise anyone to send their kids to college. I know that's probably insane as a financial advisor and a financial planner, but I think your kids out there were better off served by learning some trades, technology trades, whatever it might be. Save the $100,000 to $200,000 that you're going to waste on advanced high school. That's basically what I would call it. And keeps your kids away from the useless eaters who are lefties and all they do is complain about everything and want to change the world. It's like, well, you're not going to change the world. Odds are you're probably only going to make coffee for people the rest of your life. So, all right, let's dive in. The article argues that American education from elementary to higher learning has indoctrinated students into anti-capitalist, pro-socialist beliefs, often unconsciously embraced by parents and educators alike. I saw it with my youngest son. He, from late middle school through early high school, he turned into a little socialist, and it's still part of his way. And it's unfortunate. I didn't raise him like that, but it's a shame. This bias, according to the author, permeates through the curriculum, discouraging critical engagement with capitalism and instead promoting an idealized view of socialism. The result is a generation that harbors positive views of socialism and distrusts capitalism, despite evidence of the latter's role in raising living standards and fostering economic growth. The article suggests that higher learning exacerbates this trend, especially in humanities and social sciences, which are wastes of time if you're going to college. You're there to learn a productive skill that you can then take to the private sector. Sitting through humanities classes and BS social sciences, I don't care. I wanted to, when I was in school, I was just there to learn, get a grade, and get the hell out. Attempts to balance this ideological slant, such as the establishment of Purdue University's cornerstone of business curriculum, are seen as commendable, yet limited in scope. Mitch Daniels' effort at Purdue aims to educate students on the virtues of market capitalism, but it remains an elective course rather than a core requirement. The author argues that current academic culture often presents historical economic narratives that ignore capitalism's role in improving wages, working conditions, and standards of living. He contends that capitalism, not government or unions, fostered economic development by creating high-skilled, high-paying jobs, exemplified by Henry Ford's innovative pay practices. By contrast, unions, though beneficial to their members, can hurt employees' employers and overall economic dynamism. Yeah, if you work for if you're pro-union, you don't value what your skills are worth, and you would rather have someone else negotiate that for you. So, again, it's for the low IQ person who just turns a wrench or, puts a tire on a car over and over again. I mean, I guess those mental midgets need some protection. All right. In summary, the piece calls for a more balanced educational approach to economics, critical thinking, and historical context, stressing that government and unions should not be the sole perceived benefactors of labor advancements. Without addressing this educational imbalance, the author cautions that young Americans may continue to favor policies that undermine economic freedom and prosperity. 100% agree. All the stuff I talked about today, some of the smartest stuff I've brought up online. Would you agree out there? Yes. Shake your heads. All right. All righty. Well, that's everything that I had for today. If anyone needs anything from me, go to DSAFinancialGroup.com. All your financial planning needs can be addressed there, so feel free to give me a buzz. All right. Well, hope everyone has a wonderful evening, and I'll talk to all y'all again next time. Adios.